Hey everyone. Ever feel like insurance is a total black box? Like you need it, but you're not quite sure how it all works.
It can definitely feel that way.
Right. Well, we're diving deep into the world of insurance today. Not just skimming the surface, but really getting into the nitty-gritty.
Yeah, we're going to break down those premiums, decode that policy jargon, and really understand why insurance matters in the grand scheme of things.
Exactly. We're talking health insurance, home insurance, auto, life, even travel insurance.
Basically, all those things that protect us from life's unexpected curveballs.
Speaking of protection, isn't that what insurance is really all about at its core? Protecting ourselves from those just-in-case moments.
Absolutely. At its core, insurance is all about managing risk. It's a way to safeguard ourselves financially from those unforeseen events that life throws our way.
So it's like a safety net for those what-if situations.
Exactly. You're essentially transferring the risk to the insurance company in exchange for a fee. That's the premium.
And everyone chips in, spreading the burden, but only those who actually experience the covered event benefit directly, right?
That's the concept of risk pooling. Everyone contributes, but only those who need it at a specific time will actually use it.
Okay, that makes sense. But when I'm looking at an actual policy, what are the key things I need to understand?
So every insurance policy has a few core components: the premium, policy limit, and deductible.
Okay, break that down for me. What is a premium exactly?
Well, the premium is basically what you pay for the policy, usually monthly. You can think of it as your membership fee for that safety net.
Gotcha, so like a subscription service for protection.
Exactly. Then there's the policy limit. That's the maximum amount the insurance company will shell out for a covered event.
So that's a pretty important number, right? Because it determines how much financial support you'd have if something major happened.
Right, it's crucial. You want to make sure that limit is high enough to cover potential costs. Now, the last piece of the puzzle is the deductible. And this is where a lot of people can get tripped up.
The deductible, yeah, I've definitely heard that word thrown around. What does it actually mean in plain English?
Simply put, it's what you pay out of pocket before the insurance kicks in. Let's say your car insurance has a $500 deductible and you get into a fender bender causing $2,000 in damage. You'd pay the first $500 and the insurance would cover the remaining $1,500.
Ah, I see. So it's like sharing the cost. You take on some of the risk yourself. But I've noticed that different insurance companies can have drastically different premiums, even for what seems like the same coverage. Why is that?
That's a great question. Insurers use these super complex algorithms to assess risk.
Algorithms, huh? Sounds complicated.
Oh, they definitely can be. But basically, they factor in things like your age, your location, your driving history, if we're talking about auto insurance. Even your credit score can come into play.
Really? Your credit score?
Yep. It's all about predicting how likely you are to file a claim.
So they're basically creating your own personal risk profile, figuring out how much of a risk you are to insure.
Exactly. And that's why shopping around and comparing quotes from different insurers is crucial.
Because those premiums can really vary.
Oh, absolutely. Don't just settle for the first quote you get.
Makes sense. Speaking of different types of insurance, where do we even begin? There's health insurance, home insurance, auto, life, travel.
It can feel overwhelming for sure.
Yeah, so let's break it down one by one. What are the essentials we need to know about each type of insurance, and maybe some things that might surprise people?
Let's do it. Okay, so let's start with health insurance. This one covers your medical expenses from routine checkups to major procedures. It's pretty essential for most people these days.
Yeah, for sure. I mean, nobody wants to go bankrupt over medical bills.
Right. And what's really interesting is that thanks to the Affordable Care Act, there are no lifetime limits on essential health benefits anymore.
No lifetime limit. So even if you have a chronic illness or need ongoing expensive treatment, you're covered.
Exactly. It's a huge change, and it's provided a much-needed safety net for millions.
Wow, that's incredible. Okay, what about home insurance? What are the key things to know there?
Well, home insurance is all about protecting your house and your belongings from damage or theft. It's a must-have if you own a home. But here's a little twist you might not know about. If you let your homeowner's insurance lapse, your mortgage lender can actually buy a policy for you and just tack the cost onto your loan.
Seriously?
And
They can do that?
Yep. They want to make sure their investment is protected, even if you don't keep up with your own policy.
So it's not just about protecting yourself, it's about protecting the lender's interests too.
Precisely. It's a good reminder to stay on top of those premium payments. And speaking of lenders having a say in things, let's move on to auto insurance. Similar to home insurance, if you're financing or leasing your car, the lender will likely require you to have coverage.
Right, because they want to make sure the car's protected if something happens.
Mm.
But I've heard that sometimes the insurance the lender provides can be way more expensive.
You've heard right. It's always a good idea to shop around and compare quotes from different insurers to make sure you're getting a fair deal. And while we're on the topic of protecting things, let's dive into life insurance. This one can feel a little more abstract because it's not about a physical possession. It's about providing financial security for your loved ones if you were to, well, pass away.
Right, so it's more about taking care of the people you care about, making sure they're financially secure if you're no longer around. I know there are different kinds of life insurance, though, right? What are the main ones people should know about?
Yep. There's term life insurance and permanent life insurance. Term life is like, it covers you for a specific period, like 10 or 20 years. And permanent life, well, that one sticks with you for, well, life.
So it's like renting versus owning protection.
You could think of it that way. Term life is usually more affordable, especially when you're younger and healthy. It's a good choice if you need coverage for a specific time frame, like while your kids are young or you're still paying off a mortgage. Permanent life insurance, on the other hand, can cost more, but it offers that lifelong coverage and can even build cash value over time.
Wait a minute, cash value? You mean life insurance can actually help you grow your wealth?
That's right. Certain permanent life insurance policies, specifically those with a variable or universal component, can actually accumulate cash value over time. Think of it like a savings account tucked inside your insurance policy.
So my life insurance could act like an investment too. How does that even work?
Well, with a variable life insurance policy, a chunk of your premium goes into investment sub-accounts.
Sub-accounts.
Think of them like mutual funds. They can grow or shrink based on how those investments perform.
So there's a chance for growth, but there's also some risk involved. It's not like a guaranteed return, right?
Right. There are no guarantees with variable life insurance, just like with any investment. Your cash value can go up and down with the market. But many policies have some downside protection built in, so even if the market takes a hit, your cash value won't totally vanish.
So it's kind of like a safety net with a growth engine attached. That's pretty cool.
Yeah.
Any other benefits of using insurance as an asset like this?
One major advantage is tax-deferred growth. So the earnings on your cash value aren't taxed until you withdraw them.
So you get a little tax break.
You could say that, and that can really add up over time, especially compared to investments where you're paying taxes on your gains every year.
Okay, that makes sense. What else?
Flexibility is another big plus. You can usually tap into your cash value through withdrawals or loans.
So you could use that money for like unexpected expenses or even to help fund your retirement.
Exactly, or even your kids' education. It can be a real lifesaver in a pinch. But I have to say, these types of policies can get pretty complicated.
Yeah, I can imagine.
It's definitely important to work with a financial advisor who really knows their stuff. They can help you figure out if it's a good fit for your situation.
Makes sense.
Yeah.
Not something to jump into without doing your research. Okay, so we've covered health insurance, home insurance, auto, and even touched on life insurance as an asset. What about travel insurance? That one always seems a bit mysterious to me.
Travel insurance. It's designed to help you out with things like medical emergencies abroad, lost luggage, those kinds of travel hiccups. But it's not always as clear-cut as it seems.
Yeah, like what exactly does it cover? I feel like there are always a lot of exclusions and fine print.
You're right to be cautious. A lot of policies won't cover things like pandemic-related disruptions, for example, or injuries you get from doing extreme sports.
So read that fine print carefully. It's not a magical get-out-of-jail-free card for every travel problem.
Exactly. It's about knowing what you're getting into.
Okay, so we've covered a lot of ground here. We've talked about the basics of how insurance works, the different types, and even this interesting idea of insurance as an asset. But I want to circle back to something you mentioned earlier, risk. Insurance is all about managing risk. But how do we as individuals even begin to figure out our own risk profiles?
Now, that is the million-dollar question. And honestly, there's no one-size-fits-all answer.
Everyone's different.
Exactly. It depends on your age, your health, your lifestyle, your financial situation, whether you have dependents, and even your personal tolerance for risk.
So it's not just about picking a random policy off the shelf and calling it a day.
Nope. It takes a bit of self-reflection, thinking about your unique circumstances. You know, a young single person might need different coverage than someone who has a family and a mortgage.
That makes sense. So what are some key questions people should be asking themselves as they navigate this whole insurance world?
Well, here are a few to ponder. What are your most valuable assets? And how can you protect them? What are your biggest financial worries? And is there a type of coverage that could help alleviate those worries? And finally, think about your long-term goals. Could insurance play a role in achieving those goals?
Those are great questions to think about. It's really about aligning your insurance choices with your own values and aspirations.
Precisely. It's about taking control of your financial future and making choices that empower you to live with more confidence and peace of mind.
I love that. It's about shifting the focus from insurance as a burden to insurance as a tool for empowerment. But even with all that in mind, this whole process can feel pretty overwhelming. There's just so much to think about, so many policies, so much jargon.
I hear you. The insurance world can definitely be complex. But remember, you don't have to navigate it all alone.
Oh, thank goodness.
There are resources out there to help you. You've got online comparison tools. You've got trusted financial advisors who can give you personalized guidance.
Okay, that's good to know. But even with help, there's still that nagging fear of getting ripped off or ending up with a policy that doesn't actually meet my needs. How can we be savvy consumers and make sure we're getting the best bang for our buck?
That's a valid concern. Being an informed consumer is key. Don't be afraid to ask questions, compare quotes from multiple insurers, and read that fine print before you sign anything. Pay attention to those coverage limits, deductibles, exclusions, all that good stuff. Remember, the cheapest policy isn't always the best option in the long run.
So it's about finding that sweet spot between coverage and affordability.
Right. And don't hesitate to ask for clarification if anything is unclear. A good insurance agent or financial advisor should be able to break things down in plain English for you.
That's reassuring. Now, before we wrap up, there's one more piece of the puzzle we need to talk about.
Yeah.
The claims process. It's all well and good to have a policy, but what happens when you actually need to use it?
Ah, yes, the moment of truth, the claims process. It can be a bit daunting, especially if you're dealing with a major loss or a medical emergency, but understanding how it works can make a big difference.
Totally. Knowing what to expect can help make a stressful situation a little less stressful.
Exactly. And that's where we'll pick up in part 3.
Welcome back. So last time we left off talking about the claims process, that moment of truth when you actually need to use your insurance.
Right. It can feel a little overwhelming, especially if you're dealing with something major like a car accident or, God forbid, a medical emergency.
Exactly. So let's break it down. What are the key steps involved in filing a claim?
Well, first things first, you got to contact your insurance company ASAP after whatever happened, the incident. Don't wait.
So, like, right away.
The sooner the better. Whether it's a car accident, damage to your home, a medical issue, anything, reporting it quickly is key.
Got it. So you report the claim. What happens next?
Usually they'll assign you a claims adjuster.
A claims adjuster. What's that?
Think of them like a detective, an investigator for your claim.
Ooh, like my own personal insurance detective.
Exactly. Their job is to gather all the info, the evidence, to figure out how much coverage you get and if your claim is legit.
Okay, so they're going to ask for a lot of documentation, I'm guessing?
Yep. You'll need things like photos, police reports, medical records, whatever's relevant to your specific situation.
And they might even come and do an inspection in person.
They could, depending on the claim. So once the adjuster's done all their investigating, they'll let you know their decision about your coverage.
So that's the waiting game.
Yeah, unfortunately, there's usually a bit of that involved. But once they make a decision, they'll tell you how much they're willing to pay out.
Fingers crossed it's enough to cover the cost. But what if you don't agree with their assessment? Like, what if you think they should be paying out more?
That's where you can start negotiating. Don't be afraid to advocate for yourself.
So it's not set in stone.
Not necessarily. You can provide additional documentation. You can make your case. If you still can't agree, there are usually options for mediation or even arbitration.
Mediation and arbitration, what are those?
Mediation is like bringing in a neutral third party, like a referee, to help you and the insurance company try to find some middle ground, a compromise.
In arbitration.
Arbitration is more formal. It involves a neutral party who acts like a judge and makes a decision that both sides have to follow.
Okay, so it's good to know that there are options if you disagree with the insurance company. It sounds like it really pays to understand this whole claims process ahead of time.
100%. It's not just about reacting when something bad happens. It's about being prepared.
Knowing how it all works, what you need to do, what to ask.
It can definitely make a stressful situation less stressful, and it can help you make better decisions when you're choosing a policy in the first place.
Right, because it's not just about the price of the policy. It's about the company's reputation for handling claims fairly and smoothly.
Exactly. A cheaper policy might not be such a great deal if they give you the runaround when you actually need to use it.
So as we wrap up our deep dive into insurance, what are the key takeaways you want our listeners to remember?
I think the big ones are, first, that insurance is about managing risk and protecting your financial well-being. Second, there are tons of different types of insurance out there, each one for a specific need, so you got to choose carefully.
And third,
Understanding the claims process is super important. It can make all the difference in getting the support you need when you need it most.
amazing advice. This has been a really eye-opening journey, exploring the ins and outs of insurance. We learned about the basics, we debunked some myths, and we even uncovered some surprising ways that insurance can actually be an asset.
Who knew, right? It's all about knowledge. The more you know, the more you can use insurance as a tool to achieve your goals.
Absolutely. So there you have it, folks, insurance demystified. We hope this deep dive has empowered you to make smart choices about protecting yourself and your financial future.
Stay informed, stay curious, and stay protected.
We'll see you next time.